What's up guys, Mike here. I've had a lot of success in the past using specific indicators to trade stocks, hold them for long term, and buy and when to sell at specific times. And today I wanted to share that data that I have used for a long time and it has made me very successful and prosperous. And I want to help you guys understand that type of indicators that I use, and I want you to use those yourself so you can explore and grow and increase your wealth over time. So with that said, in this video we are going to talk about the indicator called MACD, which stands for moving average convergence and divergence, which pretty much is an indicator that shows you when to buy a stock and also when to sell a stock. It's not perfect, but it's pretty accurate, and it has helped me a lot along the way with combining other indicators such as RSI and histograms. So with that said, make sure to smash that like button because we are going to begin this video, and I'm going to teach you everything that I can in as short time as possible to use the MACD for buy and sell signals. Alright, so let's look at the theory behind the MACD buy or sell signal. I'll start with something simple and move on to much more complicated examples as we move on. So let's just start with the basics. We have our moving average line that's going across to the line 0. So this is for the MACD. You want to start from like the moving of the 26 to the 12-day moving average. So this is how the MACD usually looks like. You have a horizontal graph that's going up and down, and then this is your stocks. It's not perfect. You have edges by your graph moving up and down a lot, but let's just say in a typical case like this is our graph that's going on. So what happens is the first line you have is just your regular simple graph, but there's also a second line which is your moving average of that same line. This is your signal line. So what's going to happen is for the MACD, you're going to have a signal line that tries to follow your moving average. So what's going to happen with the MACD, you're going to have something like this. It's going to have a crossover, and it's going to go down, and you'll have like a second crossover, followed by another crossover, and another one, and it's going to continuously cross over. You're going to have a lot of crossovers with your moving average. So the crossover at the top here, this would be a sell signal. So the stock right here would be the best time to start selling and getting rid of it. And as you move across, you'll see at the bottom we have another signal that's crossing along, and that's your buy signal. This is when the graph will tell you with the MACD, this is the time to start buying this stock. And again, we have the top, we have another sell signal, and it continuously goes on. We also have something called, which is known as histograms, where there's bars that go up along and they get smaller or sometimes bigger, and then they start to turn and cross over to the zero line. This is called the zero line. That's why there's a zero there. And usually we have this crossover where the chart of the histogram goes to the other side. That's telling you as a second guess of way of guessing that the signal is about to change from a buy to a sell. And that's what usually happens. This is your histogram is helping you indicate a future direction of the next buy or sell signal. Whether it's down, which is going to be telling you it's going to be a buy, and when it's up, it's going to be telling you it's time to start selling. Also, when the line is above 0, it's like the market is usually a bullish mode, which means the stocks are going to start moving up. And when the line is below 0, that's usually a bearish mode, meaning that the market shows that it's going to start moving down. All right, so with that said, let's start with some real life examples to get the full understanding of this. And I want to show you how you can use it in a real life chart with the real life stock, so you can use it. And anyway, it's one way for the MACD to work on paper, and it's a lot more different on how it works on the real world. All right, so here we have is stockcharts.com. This is the website I use a lot for my stocks and charts that I use to follow as indicators for RSI that I've taught in the previous videos. If you want to learn more about RSIs, I'll have a link that's going to pop up. Click on that. You can learn all you can about RSI. So here in this video, I'm going to teach you about the MACD. So let's start with the company I like trading at different times, and that's Roku, ROKU, ticker symbol. And we're gonna use this as our example starting back from around January, where you could see that January was a moving line average of your 20-day. It was just going across, and then you get little bumps up the road telling you it's gonna be a good sell. How do we know it's gonna be a good sell? Because we can use our indicators with the MACD. Line is crossing above the 20-day average, telling you it's time to sell and get rid of it. And if you didn't listen to the signal, guess what? You just got torched to the bottom of the grave, because that's what happened with Roku. It straight up went to the graveyard and it was dying. And at this time, we get our second signal, which is pretty much our buy signal right around middle of March, which is around the 23rd. You could have started buying a little bit because the histogram was flipping and folding and going upwards, and it was a good indicator to use as well, because like I said, histograms start flipping when the buy and sell signal switch over and it starts moving up. And as you can see, while the histogram is moving up, as well as your MACD, a sell signal is arising, which is right around here. This is your sell signal right there. And RSI was pretty much, I would have sold right here around 70 plus RSI. I wouldn't have waited for this sell signal to come and tell me to sell. Because as you know from my previous video, I always start loading up some shares off my hand when I hit the 70 plus RSI. I don't get rid of all my shares at once. I get rid of at least about 1/5 to 25% of my shares the second it hits 70 plus RSI. It's always been golden rule. You should follow it. I highly encourage it. But the thing is, I wouldn't encourage selling all of it at once. I like to sell about 25% of my shares, and as it moves up a little bit, I get rid of another 50% of my shares at the top. And as you can see, it's a sell signal coming up right around here, and as well, we got a second sell signal right around here. Let me turn off this inspection. It'll be a lot easier. So we have a sell signal here and another sell signal here, which are your two indicators right here and right here as well. But I would have unloaded some of my shares right here at the 70 plus RSI. I would probably, by this time over here, I would only have another 25% of shares left. I would let it run usually, because I don't know, Roku is a stock that could jump up another $50 to $100 all of a sudden. So you don't know. So you don't want to get rid of all of your shares at once, even though it's moving a little bit down. I would keep about 25% of my shares. You know, sometimes I keep on hand 5 to 10 shares, because I don't know, because Roku moves a lot and it can move very quickly and give you another $20 to $50 gain bonus, which happened. Look, it was at 111. All of a sudden, you're at 140. That day, I believe it was around $144. We can check the inspection. Well, this day was 130. It almost hit 140. I know there was another day when it hit 140 because I traded it on that day. It was about $144. It's not showing over here, but sometimes, like I said, Roku could jump up a ton, and that's why I'm recommending you keep about 5 shares on hand so you can make some good money when it runs up again. But those are your two sell signals right here and right here. And again, we're getting close to our next buy signal, which happened around 104 to about 106 was the buy signal, sorry, because the MACD converged and the 20-day moving average was going across, and our MACD, again, like I said, it crossed over. So as you can see, this indicator is pretty good. It's very accurate. It shows you your moving 20-day average, which is the MACD. And it also tells you very good times of when to buy and when to sell. And your histograms are very good indicators for they're pretty much like your guess for the future, like where is the stock headed. Like before even the MACD was hit, it flipped up, right? So it's telling you this is time that the chart is just going to move up. It's a bullish signal. Look at that. This is your zero line that I was talking about earlier, line of zero. And what happens is when the histogram moves up, that's in bullish mode, and when the histogram moves down, that's your bearish mode. Time to sell and get rid of it. All right, so the next stock I'm going to go over is PM, which is Philip Morris Cigarette Company, one of my favorite stocks to trade. This has brought a lot of value to me throughout time. It's made me a ton of money, and it pays an insane dividend, which is $1.17 every 3 months for a $70 stock. That's crazy, that's an insane amount of dividends to be collecting. You could make easy money on this stock every 3 months. So here we go back to our indicators of the MACD and your histogram. You have your line of zero going across, and this was happening during February, March, where Philip Morris was starting to move down, and our 20-day average came across, and that's when our buy signal came on. Our buy signal said time to buy. It was a buy, and it started moving up. Now, I like to buy stocks at an extreme when it hits about 30 RSI. That would have been my buy signal. I wouldn't have waited for this line to cross, because that's like 69, and I would have rather got it under $58 or $60. That would have been my signal to buy this company. And as we can see, histogram flips over, telling you it's in a bullish mode. It's going to start moving up, and that's what happens. Line crosses, bullish mode comes on, moving across. You got a little sell signal here right at the top, around $78. Use it wisely. I would sell it because I like trading Philip Morris a lot, and it pays a very nice dividend. So if sometimes I might actually just hold it until it goes to extreme, and I would sell it here. For this stock, I've actually held ever since I bought it around $67. I missed my indicator. I wasn't paying attention too much to the stock, but I got it around $67, and I've been holding it ever since and collecting the dividend that they just recently paid a couple of months ago. And I sold some here. This was my sell signal, and I sold it. I got rid of it. I'm like, all right, sell signal came along. Even the MACD converged. 20-day moving average was going on. I sold it. All right, so these are your basic steps that you need to follow using RSI combined with MACD and our histogram. Using all these signs can give you the best workout for your money. You could be collecting dividends and at the same time trading specific stocks to make the most amount of returns for your money. Thanks again for watching my videos. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, feel free to add me on Instagram. I pretty much post there daily, so if you want to be part of that, make sure to add me there as well. Also, feel free to leave me a comment below. Let me know if you guys ever used the MACD before in the past. Also, if you want 2 free stocks from the stock market, WeBull is giving 2 free stocks. One for just signing up to use their platform, and a second one when you make a $100 deposit or more, and they'll give you a second stock worth up to $1,400. And right now, WeBull has a promotion where you could get a chance of winning a Google stock for free as well, just by following their 4 simple tasks that you have to do that pretty much anyone can do very easily, and you'll get a chance to win a free Google stock as well. So that's 2 stocks worth up to $1,400 from WeBull. Also, Robinhood gives out a free stock. You don't have to do anything for that. All you do is sign up. You don't make any deposit, and they'll give you a free stock with Robinhood. Thanks again for watching my videos, and until next time, make money with Mike.